right. Thanks everyone for joining. My name is Ryan Frank. I'm part of the marketing team here at Pinon Hill Capital. And with me and today's panelist is Ryan Duman, Director of Capital Markets at Pinon Hill Capital. So Ryan's got his screen up. I'll turn it over to Ryan and we'll go from there.
Ryan, I appreciate it. Thank you so much. I am going to kind of slow walk this just for a few minutes as I see some more attendees kind of coming into the room. We're expecting a very large audience today. So a couple things ahead of time. Ryan Duman with Pinon Hill Capital. Actually, I guess we'll just go ahead and get you my next slide if we can do it. So obviously it doesn't want to work right now. It'll pop up here in a second. I'm Ryan Duman, Director of Capital Markets with Pinon Hill Capital. I will be taking you through what our business does, how we do our business, what the investment opportunity is, and how the two work together. And as we go through the presentation, you may end up with some questions. You're going to get a recording of this. We'll probably get it out later this afternoon. That'll be probably the first time. You can share it with your friends. It'll just be an easy link and you can refer back to it. You'll also get my contact information as soon as we're finished here. There we go. Now I got everything working. As soon as we're finished here, you'll get my contact information. Feel free to email, call, any questions you have. You'll find as we go through this, it's a pretty simple business. What we do and how it works with our investors makes perfect sense to me, but many of you will have some questions. I'll be happy to go through all of that. Additionally, this is an investment for accredited investors only. So let's just touch on what an accredited investor is. An accredited investor is defined by the Securities and Exchange Commission. This is not mine or Pinon Hill Capital's definition. $200,000 in annual income or $1 million in total worth. Total worth, everything you have, 401ks, life insurance, RVs, artwork, guns, real estate, gold, on and on and on. 200,000 in annual income, $1 million in total worth. If you qualify for that, you are what the SEC calls an accredited investor. So to begin with that, this is an accredited offering only. In the future, we're hoping to have some offerings for non-accredited. So if that's you, stay in the loop, stay on our mailing list. We'll keep you abreast. So we'll move through. You see my name right there, Ryan Duman. I was really happy that day. I had a really nice smile on my face. I've worked in finance my entire career. I started on Wall Street, worked with Bank of Switzerland, Lehman Brothers, Goldman Sachs, and then I transitioned to where we are now in the private equity, private credit world. I like this mostly because I get to deal with individuals such as yourself. It's client facing. On the Wall Street side, I dealt with a lot of guys with really expensive suits and terrible attitudes. And so it didn't take me long to know that's not where I wanted to be. I was there a little longer than I wished, but it gave me the experience that got me to the private credit, private equity space. So let's talk about what we are here at Pinon Hill Capital. We're an e-commerce acquisition company. That's what we do. We acquire, purchase e-commerce companies, both Amazon stores and other websites or stores that aren't sold through Amazon. So we acquire e-commerce. We live on two core values, profitability and safety. You cannot have profitability without safety. This is a secured investment. So your fixed income investment with us is secured. That's the safety piece. We're going to talk about how we do that, why we do that. Why do we target e-commerce? Well, it's very simple. 2023 was a $6.3 trillion industry worldwide. This is not just a United States thing. I'm 40. 5 years ago, have you told me I would order a good majority of the things that I use, including my groceries online, I would have laughed at you. But here I am. I order my groceries online every week. 6.3 trillion in 23, moving towards $8+ trillion just 3 years from now. The e-commerce sector online, especially with growing connectivity worldwide, is why this is our target. So let's talk about the types of acquisitions we make. I'll show an example or two of those as well. We start with the run of the mill. We purchase existing Amazon and e-commerce stores, stores that are already up. Now, I may surprise you by telling you this, but if any of you have ordered from Amazon before, there's a reasonable chance that you've purchased from one of our stores at Pinon Hill or another, conglomerate of small Amazon stores. Many people think you go on Amazon and all their products are theirs and housed by them. There are many retailers, e-commerce retailers, that sell through Amazon. We also sell through our other avenues as well, our own websites. But that is the makeup of our bread and butter. We purchase existing Amazon and e-commerce stores. The next type of acquisitions are called distribution contracts. Now, it sounds a little complicated, but so I'll try to draw it in a straight line. We will purchase the contracts for distribution for a set of products. A great example of this would be something you've probably all heard of, L'Oreal Paris. They make makeup and beauty products. So they'll have a distribution contract for 5, 6, 7 very specific products. We'll buy that contract. We know that that is going to provide high velocity. We're going to buy the contract. We're going to be able to sell through all of that inventory in 60 days. And then we would then look to purchase another distribution contract. So we don't own the store. We don't own the e-commerce line. It's L'Oreal Paris, but we have the contract to distribute it through our sales channels on Amazon as well as our other e-com stores. And then we've got private label products. What is a private label product? It's a product that we either purchased or developed completely on our own. I'm going to show you an example in a moment that we take from design to market. Now, it takes a little longer to turn a profit. If we have a distribution contract with L'Oreal Paris and we put $1 million out for that contract, we know we're going to make 10% margin on it. We can turn that whole contract in 60 days. We've made a 10% on our investment in 60 days. While we're doing private label, we're going to spend money on R&D. We're going to have some manufacturing behind it. Then there's the marketing piece and taking it out to the market. So that's the negative side of it. The positive side of it is much larger margins. And when you have a great distribution base like we do, we can go ahead and develop some products. So what we do, the meat and potatoes of this, I can't share the technology that we use. We use proprietary technology that we have built based on our experience. But here's some bullet points of what we narrow down to. We look at Amazon, e-commerce, and other business acquisition that are available. We're looking for brands with a track record of success. Now, we like micro to small size businesses. So sometimes the track records may not be very long, but we can see very clearly what their inventory is, how much they're moving. And then the next bullet point, very simply, we're not interested in anything that has less than 10% margin. So again, L'Oreal Paris will purchase some contract, a distribution contract for $1 million. We know we're going to return $1.1 million in that 60-day window or whatever the turnover is. We get our $1 million back. We can purchase another contract and use that money again. We're looking for margins of 10% or more. And then $25,000 a month in sales with high sales velocity. What does that mean? Moves a lot of units. L'Oreal Paris is a great example. We own a company that sells lamps. We move unit after unit after unit after unit every single month. It was a great acquisition for us. Once we find it, we acquire it, we inject strategic capital. This is our expertise. This is what we do every day. We know where to put the money. A great example of this, we've all heard it. If you want to redo your home, you're doing some upgrading in your home, where is the value? Where are you supposed to put the money to get the value? You're supposed to put it in the bathrooms and the kitchen, right? Where everybody convenes in the kitchen and then in the bathrooms. That's where your value is. We inject our capital where we can get the most value, expand the inventory, maybe even a larger product mix, and then it becomes rinse, repeat. Get all the inventory sold out, rehash it again and again and again. And then we start with a new business. So that is the bullet point down of what we do. Here's a great product. Jasmine Lamp was the company, that was what they were called, the Jasmine Lamp. You can see very clearly how this works. It was a 10% margin. Sale price of $20 for the lamp. We're going to sell 1,000 to 1,500 of these every month. It's just cash flow. $20,000 in monthly revenue, $2,000 in monthly profit. We get to continue to, and this is one lamp, one very specific product that we get to turn over 4 to 6 times a year. Every 6 to 8 to 10 weeks, we're through the inventory. So this is a very typical, and I use a very innocuous item that somebody may have gone on to Amazon at some point and purchased, but it just shows that the 10% margin gets compounded very quickly, which is why we target and like businesses with high velocity sales. So that's the business. That's what Pinon Hill Capital does. That's what we do. We acquire e-com businesses, we inject capital, we give them better distribution situations, and thereby make a profit from it. So now here's the other side. This is the investment opportunity. We have 2 offerings. They're both 3 years in term. Again, this is an accredited offering only, but as you can see, fixed rate. This is not going to change for the 3 years. You invest $100,000, 10%, we're going to pay that out to you monthly. 100,000 over 1 year would be 10,000 in interest, so you're going to get $833.33 paid every month for the 3 years of the note. At the end of the note, you'll have 2 options. You can redeem the note. We'll send you last interest payment, or you can renew it. You can renew it for another 3 years and continue on that fixed monthly income. Now, the compound side, I like to describe this more as many of you might be familiar with a CD. You put your $100,000 in the bank. In this case, we pay you 11% compounding. So at the end of that 3 years, you have not gotten any interest monthly. We're going to send you your principal plus all of your interest at the end of the 3 years. That's the compounding option. We have a $10,000 minimum investment. We also can accept qualified funds. So IRAs, 401ks, SEPs, Roths, HSAs. We do it through a third-party custodian. I bring that up because some of us still have some time before retirement. We want to take some of our money and put it away where we know it's going to grow in a safe manner. We don't have to deal with the stock market. That's what the compound option's for. You put $200,000 in there at the end of the 3 years, you've earned 38.85% on your money. So that's the compound option. Some people, like my parents, are a great example. They're retired. They have some money with us. They get their monthly check, and that's what helps them live. So those are the 2 opportunities. Now, this has its own slide because I think it's the most important aspect of the opportunity, and that is that these notes are secured. These are not unsecured notes. Many private equity, private credit deals, frankly, are just unsecured, meaning you have no recourse. If something bad happens to the business and it goes into bankruptcy and you're unsecured, you're at the very back of the line to ever get your money back. Well, in this case, it's the complete opposite. Your investment with Pinon Hill Capital is backed by a secured note. What does that mean? It's backed by inventory, assets, and cash. You are first in the line at the capital stack. If something went wrong with our business and we went out of business, a trustee would come in, take our cash, liquidate our inventory, and pay back who first? Our investors, because you are secured. It is extremely important. We've spent a long time of our lives building up a net worth, building up our nest egg. We can't lose it in the markets. We can't put it in the S&P and hope it just goes up forever at a certain point in our lives. This opportunity, 10% fixed or 11% compounded, 100% secured, behind that, you know that it is a very low risk investment. Secured notes, backed by our inventory and assets, first in line in the capital stack. So again, to make it simple, if we made a mistake and our business went bad, the trustee would come in, liquidate our inventory, keep our cash, pay back all of our investors. It's our only debt. We do not go into debt. This is why it's being in a secured note with us. keeps you so high in the capital stack. You get paid before me, before any bill that we have, any other creditors or debits that are out there. It's very important to us. Here's an example I touched on before. You see the compound option. $100,000 at the end of the 3 years, you would have a balance of $138,887. So that's very easy math to do. It's a 38.89% return. So it annualizes the compound option to nearly 13%, 12.95% in a secured note in a growing industry that we could raise is $200 million and continue to scale through. I just had a call this morning with a friend of mine, Mateo. He's interested. He set us up with a guy, and we put this program together for him. If you're looking to invest $100,000 to $499,000, we'll bump you 1%. So instead of 10% paid monthly, you'll get 11. You do $500,000, we'll do 2%. And if you're going to do $1 million or more, I talked to Mateo about this. We'll get you a better rate lift as well as a little bit bigger note in the stack. So you'll get more interest. We're partners in this. Anybody who invests with us is helping us capitalize our businesses, acquire new products, and move forward. Two questions I get all the time. Why are you paying people 10%? Why don't you just go to a bank? Let's start with this. When you have a large portfolio such as we do, when you're acquiring new companies, you have new products, you're changing products, bank financing becomes extremely cumbersome. And I say that because every few months they want more and more oversight over the money. So it's going to take us 2 or 3 months to go out and get $50 million. And then every 3 or 4 months, they're going to want every balance sheet from every business, and it eventually just becomes so cumbersome. The regulation alone isn't worth it. We went to where the market is growing the largest, and that is the retail market, you and me. It gives us the ability to invest without bank oversight. They don't get a say in how much cash we keep. Why do you have this much cash when we need more inventory? Or why do you have no cash? You have so much inventory. We don't have their oversight trying to tell us how to run a business that we're experts at running. And it allows us to deploy the capital much faster. If you invest with us in June, at the end of the month, you're going to settle the investment. You're going to get your bonds. You're going to have your secured note. You're going to be able to go online. You're going to be able to see your investment. You're going to be able to see your interest. We're going to have your money deployed within a few weeks. Through the bank, every dollar that comes in has got to sit. Bank financing doesn't work for the business that we run. Additionally, we're registered with the Securities and Exchange Commission. This is a Regulation D offering. It's an unlimited capital raise, no need for new underwriting. That means no lawyers, less regulation. It's a much better situation. We did it all one time, and this is the offering for the masses. Again, accredited offering only, but it's available to me, you, Jim, Joe, and Sally. How we pay these rates, we went through all this. We acquire stores with the minimum margins of 10%. We're looking for high velocity, where we can take that 10% and multiply it 4 to 6 times. So we very comfortably clear returns of 20 to 30% annually and beyond in many other products. If our inventory only has a 10% margin, but we get to do that 10 times a year, we're looking at 60% return on our original investment. This is why we're raising funds. It's also why we can pay 10 to 11% extremely comfortably. Now, I say comfortably, and I want to show you why I say comfortably. Cash flow coverage. What is the cash flow coverage ratio? It is for every dollar that we have to pay an investor in interest, we maintain a minimum of 5 times that revenue. So very simply, say we have $10 million. We have $1 million in interest to pay annually. That's the 10% on 10 million. We would have a cash flow of at minimum $5 million to cover that. It is an extremely capital intensive business, but we don't have to make a lot of investment. As our cash goes out the door, it sells, we send cash out the door, pick up inventory, sell the inventory, cash comes back, replenished, rinse, repeat. So we will always have that 5-to-1 revenue cash flow coverage. It's a secured note that is not only secured by the assets and the cash, but we're always going to maintain that revenue coverage. It means you don't have to worry about us going out and raising more money than we have revenue for. We know that as we raise money, we're going to turn that into 30-40% gains on our end, which means a nice 10 to 11% return for you. You can also, I'm glad that this is on. I would have covered this in the end. $10,000 minimum investment, but you can do a combination of both. Let's say you've got $50,000. You say, I want to do $25,000 in the fixed monthly, and I want to do $25,000 in the compound. Completely okay. Not an issue at all. There's no secondary market for these notes, so there's no fluctuation in value. If you invest $50,000 on day one, 365 days later, it's still $100,000, $50,000, and it's $50,000. At the end of 3 years, it's always going to be $50,000. So we don't have to lose sleep at night with market volatility. No correlation to the market. So you can invest cash dollars, you can invest qualified dollars. You can invest in the monthly fixed. I'd like to retire and I need $1,000 a month. I make my investment, $125,000, and I'm getting $1,000 every month for 3 years in a secured note. I've got 5 years to retirement. I put my $100,000 away. I get 3 years later, I have $138,000. No fluctuation, fixed, secured, no reason to lose sleep at all. We talk about market volatility. We've been on a run the last 6 months. It's been great. But how many of us had to hold through 2022? It was miserable for all of us. I don't think there's any other way to describe it. How to invest. Let's start with this, pinionhillcapital.com. Go to our website. It's kind of hiding in the back corner. I know it's backwards for you guys. You can go in and begin your investment. You're going to have my contact info, email, call me with any questions you have, but you can go on and put in your basic information. We'll send you the documents via DocuSign. We'll make it very simple. The process to invest is about 5 to 10 minutes. It's very simple in that way. And then it's just funding, and we can fund 2 ways. We can fund via check or via wire, which is our preference. Now, when you wire money from your bank, from an investment, from Schwab, it doesn't matter. They're going to charge you $25 or $30. Let us know how much that wire fee was, and we're going to reimburse you for that. When we deal with wires, we're taking out human error. It goes from one bank to another bank. When we write checks, there's the mailman. There's all kinds of things. That's why we do that. We're happy to handle the fee on the wires. Now, I talked about qualified funds, IRA eligible. Let me go real quick through the process. It's one extra step, but it's very simple. We use a third-party custodian for what is known as a self-directed IRA. Many of you might already have them. Our preferred custodian is IRA Club. We will get you with IRA Club. Open up your custodial account. If you have a traditional IRA at E-Trade, we're going to open you up a traditional IRA at IRA Club. They'll help you with the rollover, the transfer. When those funds come in, we'll make the investment inside of your qualified account. No tax ramifications, completely like it was invested at your prior firm, except for it's at IRA Club and invested in Pinon Hill Capital's notes. If you're interested in investing using an IRA, please let me know. Bottom of the screen, you see my phone number. That is my direct line. It rings to me right here. You can call anytime. 719-627-3349. Again, that's 719-627-3349. You see our info at Pinon Hill Capital. I'm Ryan at Pinon Hill Capital. But again, you're going to get myself or one of my colleagues through the info site as well. Any questions you have, email me if you're not ready to talk, or just call me. We can set up a time later on, 30 minutes, answer all your questions, walk you through the process. I've been in this business long enough. I've seen enough of these, and I hope you can get a sense that I'm not trying to sell you anything. My job, very simply, is to provide you with the most information I can. We're all adults and we can make decisions that are best for us. I'm going to provide you with answers to any questions you have. I can explain portions of our investment, our executive summary, our acquisitions, but I can't make the decision for you. I can only educate you. So please don't hesitate to reach out. I'm not going to bite. I'm not going to try to sell you anything, and I'm not going to call you any more than I need to. So again, 719-627-3349, and you can reach us at pinionhillcapital.com. All right, Ryan, I think we got a couple minutes here for some questions. Did I get through that fast enough?
Yeah, absolutely. Yeah. Thank you so much, Ryan. That was
I
fantastic.
appreciate it.
So we've got a number of questions. I think I'll kind of pick the top couple here. We'll ask Ryan, and then for
Okay.
anyone else that asked a question that we didn't get to, we'll have Ryan follow up via email with you directly. And as Ryan mentioned, we'll send out the recording to everyone. So first question, someone asked, for the monthly investment option, how long after investing would they receive their first interest payment? Does that
It's a
happen that
great
following month or?
It's a great question. The following month. So again, if you invest in June, let's say you're interested, we talk this week or early next, we get your paperwork done, you get your first interest payment in July. We talked about why we don't use bank financing, because we want to be able to deploy the capital as fast as possible. So doesn't that stand to go for your partners, your investors as well? They should get their interest as fast as we want to get our money back. So it's the very next month right after.
Perfect. We had another person ask, is there a penalty for early withdrawal?
I'm glad this came up, and I should have touched on this sooner. There is a penalty. It is stated very clearly, 8% of principal. So let's do some math. You invest 100,000, you've been in it for 2 years. You've received 20% in interest at that point. You pull out early, we're not coming after that interest. Your initial investment was 100,000, the 8% would be $8,000, so you keep your interest. I want to make that very clear. Secondarily, life happens. It's happened to me. I was unfortunately out of nowhere diagnosed with cancer in 2017 at 37, 38 years old. Life happens. Sometimes you need your money. We're not trying to screw anybody. You call me, give us the situation. We'll get some liquidity. We'll get it out to you without a fee. We're not soulless or heartless, but there is an 8% fee for the guy who decides he wants to buy a Ferrari 2 years in, or cigar boat, or name those the things that people come up with.
Fair enough. Let's see. We had somebody ask, can they do a mix of the monthly and the compound
Compound.
options?
Yeah, absolutely. You can split your money, and I'll say it in this way. Your money it can be split 4 ways. You can invest cash dollars in the monthly or the compound. You can also invest, and I say also because you can have $50,000 cash in a compound and 50,000 in fixed, and then put 100,000 from your IRA and split that into 2. So that's why I say there are 4 options. There are non-qualified and qualified funds, and you can split it in any way that suits your needs. We like the monthly pay because many of us live on fixed incomes, especially at retirement. So you might need 1,000, but your interest would really be 1,500. So we can take that 500 and let that grow for the 3 years. That's a great question, and it is, whoever asked that question knows what they're doing. I can tell you that.
Perfect. Okay, one more in a similar vein. If somebody has a split investment with, say, IRA money and cash, would they still apply for the rate lift if they hit those rate lift amounts?
Yes. So very similar to the compound option and the fixed option. If you've got $30,000 in cash and $70,000 in an IRA, that's $100,000. We're going to give you a rate lift commensurate with that. So there's no limit in how you can split it or how much you have to have, as long as it's the $10,000 minimum.
Perfect. All right. Let's see here. We'll throw one last one in before we hop off. Someone was
Okay.
asking, are there for products or acquisitions, are there specific industries you guys focus on, or is it across the board? Is it more so the product or the company?
It's a great question. So we're very diversified. We don't focus specifically on a product. I should mention some of our other acquisitions. If you're sitting at home, you're on your computer, go Google LOL, laugh out loud, LOL jerky. That's one of our big acquisitions. It's sold on Amazon. It has a monthly subscription. That's on the complete opposite end of, Jasmine lamps, or fishing lures. Really, what makes any e-commerce business in our space successful is sales velocity. Can we turn over the inventory? Any inventory that collects dust is stealing dollars. So the actual product is less important. The industry is less important. Does it have a good e-commerce base? Does it have some distribution channels? Are we going to turn that over repeatedly? So if he has any suggestions on something we should take a look at, we'd be open to that.
Perfect. All right. Well, that's great. So I think those are the big questions we'll hit on. Again, any other questions that we didn't get to answer today, we'll follow up via email. And as we both mentioned, we'll get this recording out. Feel free to share that, and you guys can all expect an email from us later today. And we hope to see you reach out to Ryan and have a further discussion.
Thanks so much, guys. Have a great day.